Welcome to The Explainer. Today, we're jumping right into the wild story of one stock, Quantum Corporation. We're going to dig into the technicals and see if we can figure out what on earth was behind its sudden, explosive, and pretty jaw-dropping price surge.
Okay, let's just kick things off with the number that caught everybody's eye, 40.5%. I mean, that's a huge gain for any stock, right?
And get this wasn't some slow and steady climb. Nope. This was a firework that shot up in just 3 trading days. 3! So you gotta ask, what happened here? We're gonna break down the technicals bit by bit and try to understand the forces behind this just incredible move.
So to really get a handle on this explosion, we gotta rewind a little. We need to see what was happening right before the storm hit. Because honestly, where a stock comes from is a huge clue about where it might be headed.
And this timeline tells the story perfectly. For months, I'm talking June through August, this stock was just quiet. It was consolidating, kind of trading sideways in this really tight little range. And then, bam, mid-September, you see that little spark? And a few days later, boom, an absolute eruption. It just took off. Talk about a shift from quiet to, well, chaotic.
You know, a price jump this big, it always leaves clues. Kind of like footprints in the snow, right? So let's start digging. The first piece of evidence we're going to look at is the trading volume. This tells us a lot about who was behind the wheel here.
Okay, check this out. On a normal day, Quantum would trade, around 4 million shares. But on that one day, September 19th, that number just exploded to over 22 million. That's, more than 5 times the average? A surge like that, that's not just random market chatter. That's a huge signal that something big is happening. A massive wave of activity just crashed in.
So how do analysts actually make sense of a volume spike like that? Well, they have tools for this, and one of the big ones is called on-balance volume, or OBV for short. The easiest way to think about it is like a running scorecard for buying and selling pressure. When the stock closes up, you add that day's volume to the tally. Closes down, you subtract it. Simple as that.
And this is where it gets really interesting. Here's the key clue. Quantum's OBV wasn't just flat before the big price spike. It was actually rising, and pretty steadily too. That tells us that buying pressure was already building, before the price went nuts. The pros call this accumulation. It's a sign that bigger investors, the institutional money, might be quietly buying up shares under the radar. This is huge because it validates the move. It tells you there was real power building up. All right, so the first couple of clues, that massive volume and the rising OBV, they're pointing in a pretty bullish direction. So let's follow that trail and see how this all builds the case for the optimists, for the folks who think this stock has more room to run. You know, a really clear sign of strong momentum is when a stock's price just detaches from its recent history. And that's exactly what we see here. That closing price, it wasn't just a bit higher. It was blowing past its 5-day and 20-day moving averages. When you see a gap like that open up, it's a classic sign that the momentum isn't just strong, it's accelerating.
And this really is the crucial point here. When you put it all together, that insane volume spike and the price just blasting off, it all points to one thing. This was not just a bunch of us regular retail traders jumping on board. The sheer size of this move, it screams that the big money, large institutions, were getting involved, and not in a small way.
But hey, a good analysis is never a one-sided story, right? You gotta look at all the evidence, and in this case, there are some pretty big warning signs flashing that we absolutely have to talk about. And this is kind of the plot twist in our story. Can a stock actually have too much of a good thing? I mean, is it possible that this incredible surge is actually a warning sign that things are getting way too hot?
The term that analysts use for this is overbought. And honestly, the best analogy is a rubber band. The buying pressure has been so intense that it stretched the price way, way out from its normal range. And we all know what happens when you stretch a rubber band too far. It's bound to snap back.
And look, this isn't just a hunch. The data is practically screaming it at us. You've got a whole dashboard of technical indicators here. RSI, stochastics, you name it. And they are all flashing the same warning. The key takeaway is that they all agree. They're all deep in that overbought territory. It's a huge, unified signal from the charts that this engine might be running dangerously hot. And to make things even trickier, the stock has now entered what's called price discovery. What's that mean? Well, since it's blasted past all its recent highs, there's no historical map to look at. There are no old price levels that might act as a ceiling or a point of resistance. We are literally in uncharted waters here, which makes predicting what's next, well, a lot harder.
So what we've got is a classic tug of war. On one side of the rope, you have this incredibly powerful bullish momentum, but on the other side, you have these serious, flashing red overbought warnings pulling back. So where does it go from here? This basically leaves us with three possible scenarios.
Okay, scenario 1. The bull run continues. The momentum is just too strong, and it keeps pushing the price up, maybe toward 13 bucks or even higher. Scenario 2 is the neutral pause. The stock just needs to catch its breath, right? It could trade sideways for a while as buyers and sellers figure out the new normal. And then there's scenario 3, the bearish pullback. Those overbought warnings finally win out, triggering a sell-off, and the price comes back down to retest some of those old levels, maybe around 950.
And that really leaves us with the big question, not just for Quantum, but for any stock that gets caught up in this kind of frenzy. Where do you draw the line? At what point does powerful, data-backed momentum tip over into just pure emotion-fueled mania? That's the million-dollar question, and it's something every single investor has to think about.